So hi again everyone. Welcome back and welcome to the new subscribers. So this is the third video in a row for today, showing some research. I hope you enjoyed the other videos about oil and Nasdaq stocks, liquidity. And we're in for the third one. This is BTC versus oil versus Nasdaq. What the data usually shows. Many traders try to link Bitcoin to commodities like oil, but market data over the past several years suggests that Bitcoin behaves more like a high-risk tech asset than a commodity asset. This means Bitcoin often moves more similarly to technology stocks, Nasdaq, than to energy markets like crude oil or Brent oil. These are the two I am watching. If you saw the other videos, I'm showing you when the price is dropping, it will see when it's dropping, the Bitcoin will rise. For now, it is a correlation, and I'm profiteering off of it. Bitcoin and technology stocks, Nasdaq. After the large liquidity expansion during the 2020 pandemic stimulus, the correlation between Bitcoin and technology stocks increased significantly. When Nasdaq rises, Bitcoin often rises. Nasdaq falls, Bitcoin often falls. This happens because both assets are very sensitive to interest rates expectations, liquidity conditions, risk sentiment in financial markets. This is a source. I will put the link in below. Another plain text link, I will put it in below as well. The paper notes that the correlation between Bitcoin and equity market increased sharply after 2020, especially with technology heavy indices. Bitcoin and global liquidity. Another factor strongly influencing Bitcoin is global financial liquidity. When central banks inject liquidity, more money enters markets. Investors take more risks, Bitcoin tends to rise. When liquidity tightens, risk asset falls, Bitcoin often declines. These are some bank resources, plain text. I will put the links below. The research highlights that crypto markets are highly sensitive to global liquidity conditions and monetary policy. When oil fits into the picture, oil can still affect Bitcoin indirectly, but usually through macroeconomics effects rather than direct correlation. Example: chain reaction. Oil rises, inflation expectation rises, interest rates stay high, liquidity tightens, risk assets including Bitcoin fall. Because of this, traders sometimes observe oil rising while Bitcoin falls, but the real driver is usually inflation expectations and monetary policy, not oil itself. Simply summary, the strongest driver of Bitcoin tend to be global liquidity, interest rates, risk sentiment, technology stock performance. Oil can influence Bitcoin indirectly, but historically the correlation has been weak and inconsistent. But still, um, I will, and I explained this in the video of the trading today that will be out in a few days, maybe next week. I will make a new BT about this, a correlation BT between oil, Nasdaq, and try to make a backtest on Bitcoin so we can see if I can show you the results, guys. But I really have to write the script myself a little bit first, then go over it with AI as a pair coder, my Claude, before I can launch it, because I added in the Nexus BT system 2052 symbols of ETFs and stock market symbols, and also the daily archiver, because it only collects 1500. It's to see which time frame, of course. candles a day. So it will take some time, maybe a week or two, till I can collect enough data to make a sure correlation between them. So I hope you enjoyed the video today. I hope you will see the others also, and I will see you back another time. Bye.